Welcome to Sterling Weekly. GBP USD holds steady near 126 mark, moves little post UK data dump. UK Sunak says coronavirus is having a severe impact on our economy. Following the release of UK GDP report, the country's finance minister Rishi Sunak justified the sharper than expected contraction in the economy in April. He says, in line with many other economies around the world, coronavirus is having a severe impact in our economy. The lifelines we've provided have protected businesses and jobs, giving us the best chance of recovering quickly as the economy reopens. UK manufacturing production plummets 24.3% month-on-month in April versus minus 15.8% expected. The Office for National Statistics, ONS, published the UK industrial and manufacturing production data on Friday, as the overall industrial sector contraction deteriorated sharply in April. Manufacturing output arrived at minus 24.3% month-on-month in April versus minus 15.8% expectations and minus 4.6% booked in March, while total industrial output came in at minus 20.3% versus the expected minus 15% and minus 4.2% last month. On an annualized basis, the UK manufacturing production figures came in at minus 28.5% in April, missing expectations of minus 19.9%. Total industrial output plunged 24.4% in April against a minus 19.3% reading expected and the previous minus 8.2% printed. GDP found some support near a 100-day SMA amid a subdued US dollar price action. The pair had a rather muted reaction to a rather unimpressed UK macro releases. The upside is likely to remain limited, warranting some caution for bullish trades. The GBP-USD pair struggled to capitalize on the intraday bounce from over 1 week lows and held steady near the 126 mark post the UK macro releases. The pair stalled this week's corrective slide from 3-month tops beyond the 128 mark and found some support just ahead of the 100-day SMA near the 125.45 region. The US dollar struggled to capitalize on the previous day's strong positive move amid some stability in the global financial markets and turned out to be one of the key factors that extended some support to the GBP-USD pair on the last trading day of the week. The pair, however, lacked any strong follow-through and had a rather muted reaction to the latest UK macro data, which showed that the economy contracted by 20.4% in April. All the macro releases came in amid the increasing risk of a no-deal Brexit and did little to impress the GBP bulls. Nevertheless, a subdued USD price action continued lending some support to the major, albeit the upside is likely to remain limited amid shaky market sentiment. Fading hopes for a sharp V-shaped recovery from the coronavirus pandemic and fears of a second wave of coronavirus outbreak might keep a lid on any optimism. This in turn should cap the upside for the GBP-USD pair. The pair started week at 126.96, weekly high at around 128, weekly low at around 125, closing at 126.30. The GBP-EUR pair started week at 112.30, weekly high at around 112, weekly low at around 110, closing at 111.50. This is this week's Sterling Weekly. Thanks for listening. We'll see you next time.